Hello everyone, my name is Ram Dhamija. Welcome to my channel. Today is 31st of January and it's become very important to mention the date because what is happening overnight and within one day is quite extraordinary. I had made a video yesterday on gold and silver crash, and what happened overnight was accentuation of that movement. So yesterday night something spectacular happened. Silver actually cracked below $80. It finally made a bottom at about $75, and gold cracked below $4,800. And these moves are not normal. According to some people, these are 6 sigma, 8 sigma, 10 sigma kind of moves. But sufficient to say, these moves do come in, and we have seen these moves come in 2011. We haven't really seen, but we have heard these moves had actually come in 1979, 1980 also, when there was a complete crash and meltdown in metals. This time it might be slightly different, but the reasons are similar. So the last time when there was this kind of a rally in the metals, there were exchanges which had killed these rallies. So exchanges had hiked the margin requirements, and that had led to a frenzied selling. And this time it is no different. No matter what people say, what are the particular reasons, there has been a significant increase in the margins by CME, and that has basically led to a lot of liquidations. I'm going to take you through exactly what happened overnight and how you should be positioned, more importantly, because there is something which is very peculiar which is happening in our markets, which is that Sunday the markets are open, and Sunday the metals markets worldwide will be closed. So we are going to be reacting to the moves that actually happened last night, and I believe it's going to be slightly disorderly. There might be some circuits that might get in, and you have to be very, very careful. If you have been holding longs or if you have been trying to buy the dips, just please remember that to catch a falling knife is not easy, and one should never do that. One should never do that, and especially in such leverage positions, because the lot sizes are huge. So especially in India, if you look at the silver lot size 30 kgs and gold it is 1 kg. Just imagine holding a 30 kg, just a single lot, just holding a single lot and seeing that the position has got liquidated by 35%. You'll get wiped out. You'll get your capital will get wiped out just because you're leveraged over there. Even for people who are holding the metals in physical form or ETF form and all, the crash is not going to be easy, simply considering that the enormity of the fall has been tremendous. But having said that, what is the most funny part? The most funny part is, in spite of this fall of yesterday, January, these metals are still up. So January they're still not negative. Now one might ask why. That is because silver went up 68% in January before falling. 68%. Have you ever heard of that? 68% move comes usually in 5-7 years in these metals. That happened in the last 1 month. So when moves are so parabolic, then the corrections are equally volatile, because people they say that enjoy the party, but always be near the exit door. When the music stops, you should know where that exit door is. So people have made a lot of money also. It was just becoming a kind of a casino. People whom I know who have never traded in their life, you called me to say that, okay, can we take silver futures? And my answer to all of them has always been same, that please know your risk, please know what you're getting into. Okay, people like us who are professional seasoned traders also are very wary when we take positions in metals, because we know the kind of impact. If I don't know how many of you know this or remember this, but in 2020 COVID time, crude oil had actually gone into negative. Now that was the first time that had happened ever. Now what does that negative mean? That if you have got positions, you will be paying money to liquidate your positions. I mean, till zero one can understand, but negative. So I'm saying in metals anything is possible, and the problem gets worsened because they are settled in physical, not in cash. So be mindful of all these things before getting into positions and before trying to make a quick buck. There is no easy money, there is no free lunch. Only free lunch in finance, as they say, is asset allocation, which I'm going to talk about. But there's lots to talk about, lots to learn, and how to navigate these things. And if you are witnessing these moves, then you should treat it as a market fees or a market tuition. And if you don't have positions, it's very good, because then you're seeing it from outside and seeing what kind of mayhem can happen in gold and silver prices, especially there is no one way street. Whatever goes up eventually has to come down at some point in time, because the returns have to settle. And a lot of people are watching those AI videos on gold and silver, and taking cues from there. See, you need to understand, I mean, if a person is not even putting himself in front of the camera and using some AI to guide you and all, you can understand how seriously you should take that. Maybe you should use it to treat it as a news and then verify whether that news is correct or not. But trusting a AI completely on taking decisions based on that is, in my opinion, is not very advisable. There are a lot of good people. If you want to listen to people who are very, very seasoned, on gold and silver, you can listen to Andy Sheckman, you can look at Peter Schiff, these Jim Rickards. These guys are good. They have been there and they've been consistent. It's not that in bull and bear market they have been consistent. They have their view and they have been right to a certain extent. I respect and admire that. So these are the guys that you can listen to. But listening to an AI and taking decisions, that's not right in my opinion, because then you are just gambling with your money, which you should not, because this is serious business. And I really feel for people who are stuck, because what is going to happen on Sunday is going to be quite unprecedented, especially in the Indian market. So you have to be very, very careful how you navigate it. I know some people who are stuck in these positions. Thankfully their lot sizes are smaller, but still it pains, because to see anyone's loss is not good. And especially when you are in the market to make money, just because you did not know and you have been unhedged, it's a very expensive tuition fees to pay. So we have got lots to discuss today. Okay, but before we begin our video, two things. One is that please do subscribe to the channel. Second is, if anyone is interested in creating their mutual fund portfolio, which is stocks, equities, precious metals, bonds, anything, they can fill up the Google form in the description below. I am a NISM certified, AMFI registered mutual fund distributor. I help people make very strong, robust mutual funds. Even if you want to review your portfolio, you can fill up the form. Everything is free of cost. Just drop in your number. We'll have a good chat. And but please, if you're dropping in your number, be serious about it, because a lot of time people drop in their numbers and then it's like they're not serious or whatever. So if you're serious, do drop in your number over there and write what you're dropping it for. If you want to be part of my WhatsApp group, which is again free of cost, you can again do that. I'll be happy to add you for that, but just fill up the Google form. So let's begin today's video, and let us start off first with what happened overnight. So we can actually start off with this. This is Bob Coleman. He is one of the seasoned voices. I would strongly urge that anyone who's not following the metals market, he's a very, very seasoned guy. So what he says is CME margin hike alert on all precious metals, a second margin increase in 3 days, maintenance increases, 33% increase in gold futures, 36% in silver futures, 25% in platinum futures, and 14% in palladium. This is going to affect into Monday. So there is still a lot of volatility that is going to hit. Now what actually happens is, when the margins are increased, then if you are holding long, you have to pay more. If you are holding, if the price comes down, your margin requirements actually goes lesser, especially if they are tied to the contract sizes. But this 33% increase, it's going to definitely liquidate a lot more positions. So brace yourself. This thing might not be over yet. We'll know the full impact only on Monday when the international markets open. But it has been a brutal fall, so just be careful. Exchanges can do this. The last two rallies have also been killed because of the exchange requirements that have gone up. Now let us look at the charts, where the charts have headed. So this is the gold chart, as you can see over here. This is one brutal line which has come in. This, if you can see, the top was made at somewhere around 5600, and from 5600 we broke 4800. We were very, very close to 45. We did not touch 45, but we touched about 4682. That was the low that we made. And this is the blue line. This is the support line which I have been maintaining, and this support line somewhere comes around 4500. The last consolidation that happened after the 1000-point move. In fact, I have been maintaining for last 2-3 days that gold actually has been going up in 1000-point move, and at 55-5600 there was a chance. You can go and see my previous videos. There's a chance that it might correct, because it has already completed its 1000-point move. But coming down 1000 point in one day, that is unanticipated. I'll be very honest on that. And now it is getting into the same consolidation zone from where it picked off. So 4500 was the last consolidation zone, and it went up, and this blue line can act as a support, but when there is a question of margin requirements and all, then charts actually don't play too much of a role. This is just for an indication how things are. If you look at silver, this is even more brutal. So silver, you can see that it just went parabolic after consolidating over here, and in January itself is trading somewhere around, the lowest was 71, 72, something like that, and from there it went to 122. One day, one flat day, it is back. So just it took one day for it to go back to 70s. It made a low of 74 something, and now it is trading at, so there is again a disconnect between the future price and the spot price, but it's all over the place. I don't know what to trust right now. If you look at the gold silver ratio, this is another thing that we have been talking about. The gold silver ratio, if you see over here, it trades between 40 to 60, but it had actually fallen below 50, and sorry, 60 to 80, and it had fallen below 50. Now it is at 57. So there's a sharp up move in gold silver ratio, which is good. So it is coming back to that 60 to 80 levels. Let's see whether it sustains or there's a new paradigm shift that happens. We'll come to know pretty soon. But the gold silver ratio stands at 57, and I had been maintaining over here that gold is looking better than silver. Of course, both of them did fall, but gold, of course, fell much lower because gold is much more stable. Apart from that, I will come to this one, what has actually happened. But this is a very interesting chart I would like to show you. So what this basically shows is that what is the M2 money supply in the world, and what has gold been as a percentage of that M2 supply. So if you look at it, gold has traditionally been this is the market capitalization of gold, and this is the world M2 money supply. So in 1971, it was about 9%. And it went down to as low in 2000 as 4%. So M2 money supply had risen to 60 trillion. Gold was at 2.3 trillion. It was 4% of the world money. But this now, if you see over here, in 2025, it went to 16 to 17%. So this was as high as never before, or maybe in 1980, when gold peaked, it had become 16%. So is this a good indicator? I don't know, but sufficient to say that 16 to 17% was unprecedented in terms of the gold. So gold right now, after the correction, would be around somewhere in the $30 trillion, and the world M2 supply is around $200 trillion. So it's about still 15, 16, 17%. So it's elevated, but sufficient to say that this is very high. And this brutal sell-off is not only limited to gold and silver. So if you see what happened to gold, it fell 11% last night. This is just last night, not to taking into account from the top. It is much higher. Silver fell 31%, but the others also fell in. So palladium 15%, platinum 18-19%, aluminum 3.5%. everything has fallen. Everything that went up, copper 4%, everything that went up came down big time. But what is the funny part? The funny part is, I'll just show you that in spite of this, if you look at silver 1 month gain, they are still 11% up. Okay, so this is a kind of this tells you the magnitude of the rally that has happened in silver, that even after falling so much, it is still 11% up. So people should not be complaining too much. I know it is when it comes in such lumpy moves, it's very difficult to manage. And the same thing is with gold is up 8%, and silver is up hugely, up still at 11.6%. whether this is going to get wiped out, quite possible. Monday morning, all these gains, the 1 month gain, 2 month gain, 3 month gain, also get wiped out. We could see even lower levels from here. Who's to say that it will depend, when everything is being dependent on liquidity and margin requirements, and then it is very difficult to predict the levels. But sufficient to say, you should be prepared for all this. Now, what else is very interesting that we should look at? So in Indian market also, it is a mayhem that has actually happened, and more is going to follow. So if you look at silver, this is the MCX. So MCX on 30th was 387. Silver was trading, it closed at below 300, and this is going to go down further. So be prepared, be brace for impact. Sunday, this is going to create some trouble. I hope you have. And why I'm saying that is because Sunday the markets are open. MCX is opened on Sunday. And if you look at gold was trading somewhere around 182. It actually closed at 150. This is also going to see a tumble. So just have your margins in place, and please don't be caught on the wrong foot. Okay, because MCX and CDX to stay open on Sunday, February 1st. The timings are similar as usual. What else is happening in the world? Of course, there's a new Fed chair that we had already discussed, and that I don't think is part of the problem, because there are a lot of things which people say that because of the Fed chair and all, but the real reason is somewhere else. It could actually contribute a little bit, no doubt about that. Sentiment plays a role, but it is these margins which have been raised up completely which are bringing the markets down. And I believe there was some impact in the Chinese market also, where there was some freeze and so on. So it's very, very difficult to keep a track of so many things at the same time, because all these things are international. But what is happening in Chinese exchange, what is happening in a particular instrument over there, but these big margin increases are going to impact everyone. That is clear. And also, tomorrow, one thing you have to be very, very careful about is that when our markets open, then don't just rush into buy. Have a look at what is a premium or discount that our ETFs are trading to, because it is going to get distorted tomorrow morning. Gold and silver prices are going to be very, very distorted. So be very careful when you're entering into it. Should not be that you entered 15% up, or if you're getting it at a discount, then of course you can take it. But then be mindful of the fact that Monday morning, when international markets open, then you could be staring at some MTM losses. So keep those things in mind. But I'm just warning you that please check what the INAV of the ETF is, how much premium you're buying it at, and so on. And as I said, if anyone wants to invest by a mutual fund route, they can always contact me. I'll be more than happy to help you and guide you. And I've been maintaining the right way to go about it is that if I want to have 15% allocation to gold, then I'm going to take that allocation in the next 1 year, 2 year, 3 year. Okay, not that I'm going to do it tomorrow morning. I get up and I say 15% of my net worth goes into gold. No, you have to do it over a period of time. It takes a lot of time, effort, energy to build it in a way in which you are insulated. Now, anyone who has been buying gold for 2-3 years is very, very chilled out, because they know that their buying price is like still half of what the price is trading last night. So you are okay with that, because your paper gains have just reduced a bit, which is okay. Their price is going to come back again. In fact, I was very, very uncomfortable with the way prices were going up, and when I was seeing my paper gains happen in gold, I was like, this is like not sustainable. It is going to come down. So when you are been in the markets for such a long time, then you are not affected by you are not very euphoric when these kind of moves come in. Fact, you start feeling scared. Now I really understand what Buffett means, that when there is people are euphoric, you should be scared, and when there's blood on the street, then you should be buying. So I understand that now. Really, you understand the context, because when the markets are going up, when equity markets are going up, when gold markets are going up in a non-stop frenzy, I become slightly uncomfortable, because and when the markets are going down, I really feel for people who are stuck in those positions. But I also see an opportunity that if there is a correction, then can I deploy some capital of mine into the corrections, with the fact knowing that I have to keep such and such allocation in mind. So that is how you evolve as a trader. That is how you evolve as an investor. And your biggest gains are going to come when you are buying when no one is buying. Okay, and right now gold and silver are not neglected. They were neglected in 2015, 16, 17, 18, 19, 20, 21, 22. No one was looking at them. Okay, it only came into frenzy in 2024. Gold came into frenzy, in 2025 silver came into frenzy. But if you have been buying since then, I remember I had I've been buying gold and silver for a long time. Silver was just not moving. I mean, I bought it in I think 21, 22, 23. It was the same. ETF price was still the same. I was like 2 years and equity markets are like doubled. Silver is not moving. Finally started moving. Gold has been still been moving at a consistent pace. So you have to wait years and years and years to realize your returns. But when the returns comes, it becomes 4x, 5x. When the bull market comes. So maintain the asset allocation, maintain a long-term view. Don't fall into that frenzy of buying selling. You will lose money, because there are much more sophisticated trading houses, people, professionals, even AI, who will take the money out of your trading account. So be very, very have a long-term approach, have an investing approach rather than a trading approach, and you should be fine. So let's see on Monday, or in fact on Sunday, how things open up. Brace for impact is all I'm saying. Don't panic too much. Actually have a strategy in place right now. If you are holding positions, have a strategy in place that if this is going to open, I'm going to do this. If this is the price, I'm going to do this. And I just hope that there is no freeze and all, because that creates a lot of mayhem. What is going to be the impact on the equity markets? I'm going to discuss maybe tomorrow. Let's let the budget go out. There is a hope that there's something good that comes in the budget. If it does, then the equity markets will be doing well. So that will be our hope as equity participants. So we are going to see how markets behave tomorrow, and the bigger stories, of course, the metals and how they. I hope there is no collateral impact of metals on equity markets and other bond markets and so on. I hope that is sustained and contained, but one should always be prepared, and definitely have asset allocation in mind. So take care. Okay, take care of yourself, preserve your capital, and be safe, and I shall see you soon with another update. I hope you enjoyed this one. If you did, please do like, share, subscribe, and I'll catch you hopefully tomorrow or day after with what is the update. Now I'm basically trying to make a video every day because things are changing so fast. So I shall keep you posted. Till then, take care. Bye bye.